Hey, welcome. It's the Crypto Sniper. Can he do short form videos? Many people, oh, your videos are too long. Yeah, I suppose I can. Let's talk about short form on Bitcoin, and we're going to keep it strictly to Bitcoin, and it's a short update. So what did we say to you? We gave you a couple of key numbers right from the beginning when the very first setup of the inverted head and shoulder way back on the daily. We gave you 42.5, 47.5, and 40.5. There they are. This actually was the target. The purple line was the target of the inverted head and shoulders, which was made at that point over there on a blow off. The expected push through the target, because you typically break targets with momentum. That means you have a charge. How far might you overrun? In other words, we're trying to scrape a little bit more jam out of the bottom of the jar. Was 42.5 is likely. Then you should have at least a rest period, but we feel at some point the 47.5 falls. And that should be a secular point where you close a lot of your positions. Bitcoin, almost certainly, you wind back your alt leverage positions and you go back just to 100% investment, and you even can build a little bit of cash. That was the idea. That's what we said way back at 25K when the first draw showed up, the neckline 25,000 on the inverted head and shoulders. And we reasserted that after it had its long, lengthy pause at 25K. There was a dollar dominance period there that was keeping a lid. And then the ETF news came and the dollar went weak. And then we caught up all of a quickness. And there we go. So we made the target on the blow off momentum. You covered the 42.5 on the overrun, which was what we expected. And then you set about having some degree of wind up around the 42.5 that eventuated in 1, 2, and 3 wick only on the 4 hour. We're on the 4 hour of Bitcoin USDT on Binance exchange. Wick only exits. You needed to take those because you could have a lengthier period of dodgy or less good price behavior. Let's just say time will pass, cost of carry for those that were on leverage, hence why all leverage positions should have been closed. And even on investment, getting a bit of cash, because the possibility exists for you to get a chance to buy some more lower down after a rest. Now, this all depends on time frame. If you're an absolute hodl, you will just sit and it will be a less good period for you right now, and you'll eat it. The difference is sometimes those eats can turn out a little bigger than people think. In fact, there's a post-ETF fatigue. There is a very absolute fact, and it's amazing how the fundamental narrative comes and dovetails the technical narrative. Essentially, we traded the inverted head and shoulders, which was the ETF news, from the 25K. In fact, we said the 19 just run of the 20, the 19 all the nines right shoulder, and the sudden reversal was a great entry point long, literally to our topmost value we gave you before you rest, 47.5, which also is the top of a bear flag on the way down. We've also shown you that in other videos. Go and have a look. The idea is this is a short form video. And as a result, since then, you've been knocked back, and it's a reasonable resting period. That's what we warned, and a pullback. So you've got a broadening structure. So as part and parcel of that squeeze, you got a break, you got a dip back, and then eventually you made it. So it wasn't even easy. When you tend to get more up and downers, it's not straightforward. This is also a point where there's a degree of exhaustion building up. A degree of exhaustion on the move. And of course the news is out, and as a result, damn squid thereafter, buy on the rumor, sell on the fact. All the buying, taking it from the 19s, the triggering event of 25K, all the way through to the target of 40.5, 42.5, and the just blow off runs of the key level of significance, the two necklines of the two seminal head and shoulders that no one else is talking about, gets done. So on the lower time frames, it's also just thin the Koki out. You started to see a certain degree of grind. We'd also drawn this in here and across the stop. So there was a degree of rising wedge in that. You get your pop out the top literally to do your key level of significance. As I say, you got 3 little goes. At one point, everyone's super bullish. Everyone at 49 will be going, Woohoo! 69k next, 70k incoming. Of course, that's how it always is. The FOMO chasers slam. Where did it rest? You guessed it, on that key level. It formed a little bit of a squeezy there and has spilled further down, getting a bid just before our target level right now. So had you got out at 47.5 and you took 50% off, you could, and you are still holding investment only Bitcoin, you could already right now buy the other half back at 41k right now, and that would mean a fair amount more. You know, you get to make that same $6,000 or $6,500 I should say, again in the future on those extra Bitcoin numbers that you would accumulate. However, I'm not sure it's all over. There's some possible, and this is not a call, there's lots of possibilities that can transpire now. Our major initial move conviction has been performed to. So what happens now, we'll change, let's stay with the pink actually. You could have something, this did dip down around about this level, and you have had the blow off head. There is a slight risk if you get a rally or a weak rally here in and around, let's say something like this in a flag, you could get to these reasonably populated areas over there where you had localized highs, fair amount of grinding behavior, a little bit of a dip out on the squeeze there. You could get to localized highs up here, and then you could sell off again kind of hard. So there's a fair amount that's been consumed in getting yourself from the 19.9s to that 47.5, and you could find yourself a little bit bloated with Bitcoin, and there could be another slam down. There could be more concern statements made by various parties about Bitcoin, etc. There's also the dollar to consider in all of this. That, by the way, could set up a head and shoulder. It's a possibility. It's not what I'm calling a probability. There's lots of possibilities. This could all just bounce around in a ledge between the blue line, the major blue 47.5 and the 42.5, or the 47.5 and the 40.5, the 40.5. But this is a range now where we need new footprints in the sand to track. And as yet, a whole bunch of possibilities exist, but over-dominating strength is not the current theme. Having come off a fair bit, you might get, as I say, a little bit of a reaction rally. So the other thing to bear in mind is the Dixie. So the dollar, we'll talk about that a little bit. As I've highlighted, possibly something we missed and didn't emphasize as much during the possible head and shoulder that wasn't on Bitcoin was the fact that the dollar was getting pretty strong. So what's happened? The Dixie actually during this period has weakened. And this is pricing in the fact that America is going to do cuts. The city of London and New York, they're all in the expectation of cuts. Note how you just technically ran the 100 and then it wasn't having it. It rallied really hard. And then during this period that Bitcoin has run, this has actually been what the dollar has been doing. That is an incredible tailwind, falling from north of 107 back down to 101. It's an incredible tailwind, guys, for the dollar. What's it done since from 101? Well, it's bumped itself back up to 103. And it could start to look like reversals. And you're starting to have the situation of marginally lower lows here, and now actually a slightly higher high. So there you go. Pretty interesting. Pretty interesting indeed. So also, if you drop the time frame, I'm on the daily here. I'm going to go right down to the 1. And we're just going to have a look at that low. Couple of things popped for us. First of all, as HVF traders, we were drawing this and discussing this in our community. Link below, don't forget. Book a call. We saw that squeeze and we expected a little bit of upside. By the way, there's a little bit similar over here. We might have to just check, have I got it right to the end of the chart? Pull it through. Yep. Right to the end of the chart. There's also this, which we would describe as a small of its own inverted head and shoulder. This is very typical of HVF method. in the markets. Note how we drew the 102.5. That's already been a level of great significance. In fact, I'm going to stand on that one. I'm going to just pivot that from being a dotted line, make it teal and solid, and maybe even give it a bit of thickness for now while we're looking at it. That's a very good neckline. You could have pulled the 102.6. Maybe I'll go back and leave it as it was and go and grab let's thin it out a bit. Go draw one extra line just above it. I think we'll go to the 102.6. And put that in. So that is a working neckline on an inverted, like Bitcoin, head and shoulder. I'll make it a bit thicker so it pops a bit. And this is in essence your shoulder like that. I kind of almost prefer the other line. I'm a bit in two minds actually. This is all bouncing around and winding up in the sub 102.5 level, so I might just stay on the 102.5. I'm super convicted because I like that localized high is actually also at it, so it's kind of a double shoulder. When you get complexity like this, you got a bit of zigging and zagging. Of course, it's an HVF on your right shoulder. It makes sense that there was also a degree of that on the left shoulder. So what DNA you tend to see in that structure in one part is often replicated to a similar degree. So when you get complexity in left shoulder, you tend to get complexity in right, which is indeed what you got. So I'd probably go back again. I'm being a bit indecisive here. I'd probably delete that and just make that neckline right there, so that we run that. So overall, that gives you a upside for the dollar against the euro, the Swiss franc and the pound, and Japanese yen. No surprises that the Japanese yen might be shedding some ground, but this is Dixie supportive, and what that tends to do, little bit of risk reverse fear often when you get the dollar bid, that maybe you're not going to get as many cuts as people are factoring in, and the city of London and New York have overpriced this pivot, which I absolutely think is the case. Who's going to buy all that debt? By the way, you need to look at the debt markets as well. That we do separately. You can check it out with me on my updates in the community. Go down to the first comment below and book a call if you want to be part of that. So that is the 104.378. So this points to further upside on the dollar, and that is negative for Bitcoin. As you can see, since we hit here, where did the 47.5 roundabout in this right shoulder? I think it's occurred first week of Jan, and since then it's been shedding value. And of course, you've got a wind up structure at the red line over there, which is also legacy price behavior that comes from work we've done before. A little bit of a wind up, so you got there a little bit of a pullback, and then it's going to push higher, and you're going to go for 104. That could lean to further lowness. You could find yourself in the 30s, upper 30s for Bitcoin as well, and other things. And as we highlighted with that Bitcoin possible head and shoulder, I didn't actually draw anything yet. It hasn't fully formed. We haven't got a right shoulder yet, but there would be a downside projection. Because you can draw something and it's not yet done, you don't always do it. But now is one of the possible places, having done that 47.5, where it could happen. So a bit of dollar strength out there, a bit of Bitcoin softness, and that's going to keep a little bit of a lid on the market. If we just have a wee peek and clean our face there, last 7 days Bitcoin, you've lost 11% for not taking off. You could have 10% more Bitcoin buying in today, and who knows if that's finished. You look at the 7-day performances of all of the tokens. ETH is down 6, 5 for Solana, 8 for XRP, 14.7, ADA, Avalanche 14, Doggy down 7, Polka down 13, Chainlink down 1%, Polygon down almost 15, Toncoin 1.42, A lot of double digits or knocking on double digits, Shiba, and then 12.25 for internet computer, etc., etc. So you can see that this is, and it's not over. This is generally not just a Bitcoin phenomenon. This is a general lean on the market overall. Okay, I promised to keep it short, so that's exactly what I'm going to do. Bitcoin potentially downside. If you were to get that head and shoulder, how far might it go? This is not, again, as I say, a prediction. So I'm going to just make sure that people don't say, oh, so you become a bear now. We've got so many clowns. Macro. This is part of a macro recovery bull. The macro is bullish. The short medium term is bearish for us. And the very short term, you're getting a little bit of a bid here, could be mildly bullish on a grind. So if you didn't do defensive stuff, you might get an opportunity of a grind up in and around. I wouldn't look too much further than these levels. This, I will certainly want an alert next time we run this. You could be getting a bit of a bid just above the 40.5 over here, and you could grind up. So where would that head and shoulder, if it was to be, which we are not saying it will be, it's very early doors to start calling it, but if it was to be, you could even, and assuming it performs as well. So there's a couple of things about patterns. Generally, bearish patterns don't always perform in bull markets. They don't have to perform. They can just start and fail. So let's just take it down to around the 41 mark. We don't know where the neckline will effectively be, and we can clone that and put it down there. And that is on a 4 hourly, roughly 4 hourly. So this is very rough. This is not a hard number. So if you're unlucky enough, you could have a 33. As I say, that's not a prediction. It's a possibility. It may not form the head and shoulder. It might make a falling wedge. It might just bounce around in the ledge. There's so many options it can do. But the key point was to close. This is almost a retrospective. When do you build faith in the system we are explaining to you? Had you not done better, had you just taken off, closed all leverage positions at 47.5. On the alts, Bitcoin, everything, took some investment off and had a third cash or 50% cash. Would you not be in better standing right now? Would you be more relaxed? Would you be more everything? It's not about just maximizing this bull market. It's about enjoying it, not being wired to your device, not getting worn out, not getting the nervous stress. And when it's bullish, you don't mind, and you can survive on 4 hours sleep staring at your device before, in the middle of the night. Okay, good luck. Long run, that ends badly, and long run markets turn. How about doing relaxed, big time frame? Hey, this is the 19.9. We think it's bull from here. That's your 25 trigger. Until 47.5, I'm biased long, and I close a large part at 47.5, and I look to rest a little bit during this bull market phase and end up. Isn't it amazing? The ETF fundamental narrative and its eventual confirmation coincided with the technicals exactly, and the 47.5 run. Call it a coincidence if you want. No surprise from me. We've also, remember, highlighted the possibility on a bigger time frame of the head and shoulder. I've had to keep moving the shoulder, but you could already be in the making. So that lower 30 run or mid 30 run could happen, and then you'll have the 47.5. This was all ahead. Let's get it all in for you. Let's get 4 days in there. You'll probably get the whole pattern in, and then you will have the macro target. Again, the reason why it's not a bear call, it's a pullback call for the 145 that we've spoken to, could in fact be on during this period. So there you go, that is kind of there. But I'll just keep moving him out the way so we can do the breakdown. So that's a short-term update on crypto. For the people that say BTC please, BTC please, we told you before what to do with BTC. We told you before. You didn't do it because you don't trust HVF method. It's just a guy on YouTube for you whose opinions you'll just observe and throw into a mix with everybody else's opinions and dilute away, along with Raul and no, not Raul, Max Kaiser, that says 250,000 by next month, or 1 million by then, or Michael Saylor that says whatever he says as a non-technician. But the point of the matter is, had you done that, we gave you what you needed to do. Now we're just retrospectively saying, looks like it wasn't such a bad idea. And you get to relax. That's the key thing. It's not a chronic crash. There was 47.5 and now you're sitting at 41. You've lost $7,000. Don't cry. There's no crying in baseball. It's not the end of the world, but be more efficient. Be more efficient, and HVF method is the manner in which you do that. Link is below. Catch you next time. Thanks for watching, and we will be seeing if it does dip a little deeper or whether it just churns around. I don't think it goes lower than the previous shoulder. It could equal it. That was around 33 if it was to do a shoulder. So I would expect, I don't think you go below 33 in the worst case. And that doesn't even mean, you get past 35 or 36. It could churn around. Instead of doing depth, it could just muck about a lot in the upper 30s, lower 40s. And that can still form the shoulder that we need for the structure that is one of our many forecasts that could be for the later upside on Bitcoin. Catch you later. Thanks for watching. Don't forget, like and share. Thank you so much. Bye for now.